All right, good morning, everyone. It is 8:25 on the morning of February 14th, 2023, and this is my pre-market strategy session. Just to we've got about 5 minutes until the CPI report comes out at 8:30 this morning. Uh, and well, CPI is kind of the big indicator. It's the big mover right now as to what happens as far as bullishness and bearishness goes. If CPI weakens more than expected, then the markets will rally. If they come in as expected, well, I guess the markets they may not rally so much. The greater CPI is the sort of higher the probability of the Fed raising rates, even higher than 5.5% will be. Now, uh, I'm basically just waiting for the market's reaction. You know, uh, and there's going to be an initial reaction to just the headline numbers, and then there's going to be the reaction after everybody gets an opportunity to look under the hood at sort of what the weightings are of the different segments of the CPI, as well as what segments of the CPI are moving up or moving down. And I don't know them very well. Actually, I don't know the different segments. I know housing, and there's owner's equivalent rent, and there's some other energy. I don't remember what goes into the CPI report actually, but it's a bunch of stuff, and it's kind of like, well, okay, I'm just here to trade it. The better I understand it, yeah, it might help out a little bit, but not when it comes to trading. Trading is just trading. So all right. Yeah, I don't really care. I just want to see the market's reaction. Just kind of take a look around here real quick. Here's the daily, and these are the levels that I've been using now for about a week, maybe a little bit longer. Is this high end of 309.62, low of 294.08, and then this middle ground is actually the top of the bottom of the gap. There's a gap between February 1st and February 2nd, and that the bottom of the gap is at 300.92, and I was expecting it to pull down into the gap and find support in this area. Unfortunately, I didn't participate in making a purchase down here, which would have been that was my plan all along. Unfortunately, I was away from my desk and wasn't able to get back to. I had some car issues I had to take care of, and so I wasn't able to get back to my desk in the afternoon on this day to participate in what was somewhat of a bullish day, but setting up for the next move, which, in my opinion, I'm bullish. I think that the CPI report is going to come out, and it's not going to be as bad as some folks are predicting it to be. So a break above 309 today is in the cards as long as CPI comes in the way it's supposed to. Now, it's 8:29 in the morning here, so let's see. We'll watch the 1 minute. I'll pull the 1 minute up. 8:29 and how many seconds here? 43 seconds. So let's see what happens here. 8:29. Oh, and so yesterday though, yesterday I did put on. Ooh, look at that. All right. Maybe it came in stronger than expected. So this is the initial reaction. So initial reaction is that CPI came in greater than expected, or it came in line. So to see a bullish reaction, we would really want to see CPI come in lower than expected here. So let me get rid of these horizontal rays, and we'll take a step back and look at what we have for Fibonacci retracements. So this Fibonacci retracement is a retracement from the entire move, the Qs at the bottom of the 2002 move after the dot-com bubble, all the way up to the top in 2021, November of 2021, after the stimulus move, after the sort of COVID crash and stimulus move up. And so the price level here is roughly around 311, 309, something like that. Well, actually, so here's the that's the retracement of the peak from the recent bottom, and that puts us right around 313 as a resistance level, and 311 for the all-time huge Fibonacci retracement. Let's go back to the minute and see what's going on with the minute chart here. Looks like a little dip down, and it's recovering. And so let's see. Let's go to CNBC. See what CNBC says. See if they report. Inflation rose 0.5% in January, more than expected, up 6.4% from yesterday. Okay, welcome, please, journalism, allow ads. Oh God, I updated my computer recently. I had Ad Blocker Plus taken off of the CNBC site, but I did like an update or something, and it screwed up all of my windows. All right, fine. So the 6.4%, it's still the trend. Like one data point is not enough to establish a new trend. So the next CPI comes out next month, and it could be lower than 6.4%. I'm bullish. Yesterday I put on a trade at roughly, let's see, let me go to the 10-minute here. Right in here, I am straddling this move. I anticipate a strong move in either direction. So I came into my desk yesterday at 3:30 in the afternoon, and put on, right here in this candle, I put on a straddle for the April 23 strikes. Is that right? April 23? Pretty sure. February, oh, no. Oh, April 21. Actually, it's April 22, but technically 21st is the last day that they trade. And so, my options are long dated. I've got a pretty decent amount in premium on those options. And the idea is to hold them until I get a double either way. Either we're going to get a move to the upside that's enough for me to get a double, or we're going to get a move to the downside that's enough for me to get a double, which means that the move in the price of the market will get me to enough to not only cover the opposite side of the trade, but then to also double one side of the trade. So my puts are it's gonna be basically three puts or calls, whichever way it goes. I don't care. They're gonna net me 3 times what I bought them for, so that way it covers my initial investment and then also nets me 100% on the opposite side. And between now and April, I certainly expect that move to happen one way or the other, whether it's a breakup or a breakdown. It doesn't matter to me. And I'm holding that. This will be a swing trade. It's something that I'm holding until it works out for me, and then otherwise I'll be trading around it daily on an hourly or half-day time frame. All right, everybody, good luck out there. Keep your risks tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you tomorrow morning strategy session. Thanks for tuning in. I am out.